All right, good evening everyone. So let's start today's session. So today actually we are going to start the purchases in zero. Okay, so purchases in zero. So let's get started. So the first thing is actually we are going to start with the purchase orders. Okay, so purchase orders. So the first thing is actually so how do you access the purchase orders? So this is how you can access the purchase orders. It's very simple. All what you have to do is you can see there's a business module. From the business module, what you can do is you can simply select purchase orders. You can see when you click the business module, so it will open the drop down list. From the drop down list, you can see the purchase orders. This is we call it purchasers section. You go to the purchase orders. So once you go to the purchase orders, so then what you do is you raise the new purchase order. All what you do is you click new purchase order button. So once you click new purchase order, so then you first enter the supplier's name. Now the thing is actually the purchase order is a commercial document between buyer and the seller. It's a commercial document between buyer and the seller. All right. So the first thing what you should do is you create here a supplier. So if you have already created the supplier, you select the supplier from the drop down list. For an example, now here, so let's enter here the supplier called Dimple Warehouse. All right, so I'm creating a new supplier, Dimple Warehouse. So Dimple Warehouse is the new contact. So you select here, you created here the supplier name. So once you create the supplier name, then what you can do is you can select the date. All right, you can select the date. So let's say the date is, so let's select here today's date, which is the 22nd March 2025. So then what you do is you select here the delivery date as well. All right, so the delivery date also you select it here. So delivery date you can select it. So for an example, you can see 7 days, 14 days, 30 days, so like that you can select it. So now the thing is, the first thing is you need to make sure you select the purchase order date. So then you need to make sure you select the delivery date. Okay, so now this delivery date can be changed from supplier to supplier. Okay, so normally it is 7 days, within 7 business days. That is the standard delivery number of days most of the suppliers provide. Okay, so 7 days is the standard delivery days time. So if you select 14 days, then you can see the delivery date will be 14 days from the purchase order date. So if we select here 7 days, it will be 7 days from the purchase order date. So this can be changed, like I mentioned, from supplier to supplier. Then you can see purchase order number has been automatically generated. So this is based on how we updated under invoice settings. So I hope you remember how we updated under invoice settings. There we update the prefixes and the number. Okay, so this number you can edit here as well. If not, if you want to automatically generate, then you need to edit the under invoice settings. Then the reference number is not mandatory, you can update it here. Reference number can be a sales order number from the supplier. Okay, so it can be sales order like this 001, something like that. But then what you do is here, you can see everything is in LKR, okay, rupees. Amounts we'll set it as tax exclusive, so we'll keep the default ones. Then we provide the description. So let's say we are going to purchase something. So let's say some cost, let's assume some cosmetic items. All right, so let's say Head and Shoulders. All right, Head and Shoulder shampoo. Because today we are going to start the inventory as well, so I'm planning to cover the inventory as well. All right, so Head and Shoulder shampoo. So I will put the color as well blue. All right, still I have not touched the item part. Okay, so I'm not creating any items here. Simply I have updated the description of the item. All right, just enter the description of the item. So then what I do is I enter the quantity, let's say 5 items. So unit price is, let's assume 300. So let's not 300, let's say 500. And let's increase the quantity to 10. Okay, so you can see altogether 5,000. And then we need to select the ledger account here. Okay, so ledger account should be an expense account. It should be expense account or the purchase account. Now here actually, based on how you record this purchase, okay, based on how you record this purchase. So then based on that, you select the relevant expense account, okay. Now this can be a direct cost. If it is a direct cost, you select cost of goods sold. If it is a general expense, you select general expense. If it is office expense, you select office expense. This is a staff amenities, you select staff amenities. All right. So it can be any type of expense. So how you are going to decide the nature of this transaction, nature of this purchase, that is depending on the items that you have purchased, the items you have ordered, right? Now, normally actually in a standard PO, now there are different type of POs. You have the plan POs, you have contract POs. I'm not going to discuss about this plan and contract POs. Those type of POs are available in the ERP systems like Oracle, NetSuite, SAP and everything. But in these platforms like accounting platforms for small and medium businesses, what we create is a standard PO. In the standard PO, you can see the supplier name, purchase order date, delivery date, purchase order number, then the description, quantity, unit price. Okay. Now here, so if you are going to include the tax amount, then you need to make sure you select the account, okay, ledger account. Now there are few ways you record it, this purchase, this type of purchase. Now if your company is into buying and selling, okay, so what your company does is your company purchases cosmetic items and simply sell it to the customers, keep a margin and sell it to the customers. So your company is actually into importing or exporting or buying and selling. So in that case, so whatever you purchase, you have to record it as a inventory asset, right? So if let's say you also into buying and selling, but you don't have a warehouse, so how do you record it? Is whatever you purchase, you record it as an expense, okay? So whatever the items that you purchase, you record it as a cost of sales. That is not the best practice, but some of the small and medium businesses which are into retail, and production, so they do in that way. It is much more easy because they don't have a large warehouse, they don't have actually inventory at all. Simply actually online sellers, retail sellers, online sellers who are into e-commerce. So they are actually, what they do is they don't have stocks. So whatever they purchase, they record it as a cost of sales, okay? But that is not the best practice. Now in this case, so let's assume in that way. So let's assume this like business that we are running is into e-commerce business, okay, e-commerce business. So what they do is they sell products online, okay, on different e-commerce platforms. Like it can be on Shopify, Amazon, like that, or on their own e-commerce platform. So let's select as cost of sales for now, cost of goods sold, including VAT. Now here actually I have not created the VAT on purchase. Anyway, I'll select the VAT on sales for now, but it should not be VAT on sales. So anyway, what we can do is we can immediately create a new tax rate, right? So which is 18% saved. So then, so you can see it will update here. So if not, actually what you can do is cost of goods sold, and these should be VAT on purchases, okay? So once you update, you can see the clear picture here. All right. So including VAT, the amount is 5,900 rupees, right? So then the delivery address you need to provide here, okay? So now, so your delivery address can be same as your office address. So if your warehouse is next to your office, you can simply mention it the same address. Let's say if your warehouse is at a different place, or your factory is at a different place, then what you do is actually, you in that case add a new address. You have the option to add the new address, all right? Now in this way, let's assume the postal address is same as the warehouse address. Then the attention person's name you can update, let's say Joel. So Joel is the person we are dealing with from the supplier side. Then the telephone. So telephone like this you can update. Then delivery instructions also you can provide. So when you're providing the delivery instructions, remember it should be limited to 500 characters. That means it should be limited to 500 letters. Okay, not more than 500 letters. So we can mention like this: please deliver this order within 7 days, Monday to Friday. So we can mention we are available from Monday to Friday from 8:30 to 6:30. Okay, so these are the business hours. So like this you can update it here. So then what you do is, so once you enter these details, including the mandatory details, you can simply go ahead and you can save as a draft. All right, you can see this is the draft purchase order that we created. This is the draft purchase order that we created, and you can see, just like a quotation, there are different approval levels or the authorization levels. Now the next thing is actually what you can do is, first you can select this purchase order and you can print as PDF. You can print as PDF. So once you print as PDF, you can download as a PDF this purchase order. Okay, so you need to make sure you upload the logo and everything. How do you upload the logo? So you need to go to the invoice settings. There you need to upload the logo to the relevant branding theme. Okay, so what is the branding theme? Branding theme is actually a template for source documents, okay, including sales forms and the purchase orders. Branding theme, we can also call invoice template, or the template for quotation, invoices, remittance advices, customer statements, receipts, plus the purchase orders. Okay, so once you upload the logo, so then you can see this is the format. Okay, and you can see the title. The title of the document is draft purchase order, and the information that we update all are available here, including the VAT amount, VAT on purchases. Okay, now what we do is, as next step, so let's say we have assigned these different tasks, okay, purchase related tasks, to different staff members. So one person creates the purchase order, what other person does is, there's another team member in the purchasing department or the accounts payable department, and that person what does is, simply that person submit all these draft purchase orders for approval. So you can simply click submit for approval. Okay, so then it will simply go to the awaiting approval section. So once you go to the awaiting approval section, in a large organizations, how you handle the inventory, how you handle the purchases is completely different. This can be changed from industry to industry. Okay, now if you have manufacturing requirements, let's say you might ask, how do you issue the good receive note? These are the questions sometimes even our clients will normally ask. How can we issue the good receive note in Xero? How you can issue the bill of materials? Remember, Xero is not an inventory management system. Xero is purely an accounting system. It has a basic inventory module. Okay, so some of the tasks that you want to, inventory related tasks that you want to do in accounting system is simply not practical. Okay, so therefore in that case you have to go for a third party add-on, which has to be an inventory control system, which can be integrated with Xero. Okay, so there are a few like popular platforms available in the industry, like small and medium businesses, ERP level ones. Like there are like platforms like Katana, Sin7 Co, formerly known as Deer, Unleashed, then the Emerge. Okay, there are so many platforms like that. It has actually the manufacturing module as well. You can create the raw materials, you have the finished goods, then from the raw materials you can convert to WIP, work in progress. From the work in progress you can complete to finished goods. All right, you can create the production orders. So like that, so many things are there. Assemblies, you can create it. A lot of approval levels. Okay, it's an ERP level platforms. Okay, and the transactions then automatically you can push to Xero. All right, because I know like all these, I know actually I have used all these platforms that I named, because especially Unleashed. So Unleashed actually we implemented for one of the renowned tea companies here in Sri Lanka. So actually, so it's Australian-based tea company. So they do exports, from Sri Lanka to different countries like Australia, especially to like in Australia, all the supermarkets like Coles, Woolworths, like that, and also so they do exports to Egypt, they do exports to Singapore, and so many other countries. Okay, US as well. So remember, so Unleash actually they actually played a very important role, because thing is manufacturing, production, and the purchasing of tea. There are other things like pouches. Those things actually, those raw materials you can't enter in zero. Okay, so if you're actually a very small medium business, let's say that sells only finished goods, and so you have business, let's say into buying and selling, so then actually you can use the inventory module available in Xero. Okay, now anyway, we have not touched the inventory part yet. Okay, so I just want to brief you how the inventory module, how it works in Xero. All right, so now we create this purchase order. There's a person, like I mentioned, submitted for approval. So then how it happens is actually the next step is you need to email this one. Okay, you need to email this one to supplier, right? So because we placed the order, okay, so we placed the order. In this case, we are the customer. So supplier, we are actually issuing this purchase order to supplier. So you select it, you can send it. All right. So when you are sending, you have to make sure you enter here the name of the person that you are dealing with. You send a copy to your email. Also, so that you are sending a carbon copy. Also, you need to enter here, in this case, supplies Dimple Warehouse email. You need to update it here. So you can update as info@dimplewarehouse.lk. So you can see this is the email message, and then you can simply send out. All right. Yeah, actually, because we are using a trial, you can see now there's a privacy policy they have brought. Okay, that's not a problem. So anyway, you should be able to email, okay, this purchase order. So once you email it, so what will happen is then once you email it, okay, so you are emailing now. When I open this purchase order, you can see still I have the option to edit. So I can edit the quantity, the dates, due date, delivery dates, everything I can edit here. Even the ledger account I can update here. Now thing is, once you email it, supplier will simply go through your PO, and supplier will tell. So these now let's say you have ordered multiple items, all right, not only shampoo, other cosmetic products as well. So in that case, what will happen? Simply supplier will check in their warehouse, and supply is going to confirm you that these items you can the supplier can deliver. Okay, now there can be some changes. Sometimes the items that you ordered are not available in the supplier's warehouse. So in that case, what will happen is actually supplier will simply communicate to you via email or over the phone. So you need to adjust, you have to amend it in that case. So then some of the items you have to remove it. Okay, so that's why you have different approval levels. Okay, so sometimes actually you have to remove some items, or sometimes supply will suggest you substitute items for the items that you ordered from a different brand. If not, what will happen is actually supplier only has less quantities. Okay, so therefore supply can only, so let's say if you ordered 10, supply can only provide 5. So these changes can happen, and also there can be price changes as well. So due to market conditions, due to inflation, supplier prices have increased, or it can be actually the supplier's decision to increase the price, let's say following month. So when you place the order in the following month, you can see when you receive this sales order from the supplier, you can see the updated price. Prices have gone up. So in that case, these changes, you have to do it. You have to simply update in your PO. All right, you have to amend it. So once you update the purchase order, so let's say for an example now, let's say you have ordered 10, but as per the unit price for this product item is 500. So as per the supply sales order, it's actually simply 550. 50 rupees has increased. So when you change it, you can see the prices have gone up. Your cost price has gone up now. Okay. So then what you do is you do this update, then you save it. Once you save it, then next thing is you confirm it. Okay. You confirm to the supplier that you are going to place this order from this quantity at this price. And you select here, you can approve it. Simply you can click approve and you can approve it. So it goes to the approved section. All right. So this has been approved. So then what will happen is supplier is going to send you again the approved sales order from their system. Then apart from that, you will also receive the what? Packing slip. Okay. I'm sure you might have heard about packing slip. So what is the packing slip actually? The packing slip is simply, we call it, in the packing slip, what you can, in the under invoice also I showed you the packing slip. So packing slip is a confirmation that it is a confirmation that supply is going to deliver these items and quantities. Okay. So normally on the packing slip, you normally mention the items that you ordered and the number of items that you have ordered. Okay, the item names and the number of items that you have ordered. So simply you can see on your like sales order that you received from the supplier and the packing slip. From the packing slip from the supplier, you will see the items, the name of the items and the quantities of the each and every item. Okay, you cannot see the unit prices. Normally we don't mention unit prices on the packing slip. So once you receive the packing slip, it is a confirmation that these items are going to deliver. Okay, and the quantities. So then they issue the delivery note once they actually deliver the goods from their warehouse. All right. So then along with that, they are also issuing the supplier invoice. So what they do is they convert the sales order into a supplier invoice. Okay, from their system. Same thing that what we do. Okay, when we are invoicing the customer. So once you approve it, what you have to do is then you need to select here. You need to convert it to a bill. Okay. So you select here the purchase order. Then you have to click build. You can see green color button build. It gets enabled. Then you can click OK. So once you click OK, then simply you can see this purchase order has been built, and you also get a message saying that the purchase order was marked as built. So then you can view the item. Then the next thing is you select this build purchase order and you copy this one to a bill. You copy this one to a bill. First thing is you need to mark this purchase order, approved purchase order as a build. Then you need to convert into a bill. So you select here, you copy. You can copy to a bill here. You have to select bill. Okay. You can also same purchase order, you can copy to another purchase order. Same content, you can copy to a new purchase order. Then the same content that you entered in the purchase order, you can simply copy to a new invoice. Okay, sales invoice. So in this case, we want to convert the purchase order to a bill. So then what you do is you create the draft bill. You create the draft bill. So then once you create the draft bill, you can go to you can see view item section. So that means actually you can see here there's a message will pop up here like this. Then from here you can click view item. So it will take you to the bill section. Now how you can view this? You click business here, you go to the bills to pay. All right. Now let's say for an example, once you have converted, let's say you want to go to the bill section. You don't need to, it doesn't necessary for you to click the bill item. What you have to do is click business, then go to the bills to pay. So once you go to the bills to pay, so you can see here the Dimple warehouse. All right. So this is the Dimple warehouse. So you can see here the Dimple warehouse, and This is the draft bill that we created, draft bill we have created. Okay, so then once you receive the original bill, what we do is we can update the supply invoice date, supply invoice due date, everything you can update as per the original supplier bill. So let's say if we have agreed with the supplier to settle the bill within 30 days, so then you can set 30 days due date as the 30 days from the supply invoice date. So in this case, actually, it is 21st of April. Okay. Then here you can see again the PO number has been copied here, but along with the PO number, you can also enter the original supplier number. Okay. In some systems, okay, so now let's say for an example, if you take a like inventory system, it will create the bill number as well. Okay, that is the bill number from your system. So in that case, what you do is simply you can enter the original supplier bill, then it will supersede your system supplier bill number. Okay, supplier bill number. So here what you can do is in Xero, when you're especially doing like this, when you convert the purchase order into a draft bill, here you can keep the purchase order number like this. If you do not need the PO number, if you think we don't need the PO number, you can simply delete it. Then you can update the original supplier number. If you want to see the PO with the bill number, then you can enter like this, or you can enter here the PO number, then you can enter dash or slash, or you can keep 2 semicolons. Then you can enter here the bill number you can enter. Okay, bill number you can enter, supplier bill number, supply invoice bill number. So then what you can do is the attachment, that means the digital copy or the soft copy, you can simply attach it. Okay, all what you do is click attached icon, and you can click the upload icon, and you can upload it here. All right, for an example, so like this you can upload it. Okay, so once you do that, then what you can do is you can go ahead and you can save as draft. You can save as draft. All right, first let's save as draft. So once you save as draft, you can see now this has been saved as a draft. Okay, this bill has been saved as a draft. All right, this bill has been saved as a draft. Okay, so do you have any questions regarding POs? Any questions regarding POs? Please let me know if you have any questions. Sorry, do you have any questions? Any questions? Please let me know if you have any questions regarding the POs. This is very simple. Okay, now remember one thing. So when we created the purchase order, there actually we didn't create any product or the service items. Okay, we just simply on the narration or description we mentioned the product item name, and then we decided to code it to the cost of sales account, right? So we record it as an expense. So why? Like I mentioned, we have to assume in this case, so this company or this organization is into buying and selling, and this is actually small and medium business. So whatever they purchase, they record it as an expense. So they don't have the inventory or warehouse. All right. So now most of these drop shippers, okay, online sellers, they do it. So they don't have actually stocks in-house. So they have actually online e-commerce platform. It can be on Shopify, Amazon FBA, any other platform. You can even design e-commerce platform, and you can simply publish all the items that you sell. So then different items. So then actually the customers can you can increase the website traffic, and then simply customers can come to your website and place the order. So when you place the order, simply you can mention, it will be automatic normally. Now when you buy something online, on Daraz or any other platform, it's the same process. So you will receive, so it will tell like how many number of days that you will receive the order, right? So so then actually what they do is, actual scenarios what they do is they don't have the stocks, so they actually place it from the another supplier, and that supplier will deliver to you. Okay, that supplier doesn't meet you, all right? So but you are dealing with the that other person, so that person is the intermediary person. So this person has the online seller has the contacts with the supplier, so simply he communicates with the supplier and ask him to deliver the order. So they will do the packaging. So for the packaging you have to pay the extra and everything. So then they deliver the order within set period to the customer, all right? So this we call it drop shipping, or now we have the drop servicing as well. Okay, that's also expanded to the service sector. Okay, so now what we do is, now we create the draft bill. This is a draft bill. The next step is, as you know, you can submit for approval or you can directly approve it. Okay, so both options are available. You can see we have the option to delete and print as well. You can also print the bill, but remember, this print in bill means it's not the original supplier bill. Original supplier bill you can only attach it. Okay, you can enlarge also and see. So let's submit for approval first. You can submit for approval. So then it goes to submit for approval section. Then from there you have the option to approve, delete or print. So if you print it here, you can see this is not the original supplier bill or invoice. This is simply the zero, the PDF copy of the bill. Okay, so you can see this is not a legal invoice. This is actually zero supplier bill PDF copy. Okay, so you have the option to generate the supplier bill as well as a PDF, not the original supplier bills. It's a zero version, right? Zero supplier bill copy you can generate as a PDF. All right, so the next step is, as you know, is approve. Now you can see still you have the option to delete it, but once you approve it, what will happen? It will simply go to the ledger, right? Now this has been posted in the ledger. All right, so then now this has been posted in the ledger. So when you open, all right, so when you open, you can see here, now you can see here how this has been posted in the ledger. The cost of goods sold account has been debited with 5,500 rupees. Then the VAT payable has been debited with 990 rupees. Then the total 6,490 has been credited to accounts payable, right? So that is the entry that has been posted in the ledger. So if you want to see the entry, you know how to check it. Go to the reports. Okay, now actually some traditional accountants, what they do is they go ahead and check, because this is my experience, you know. So we work with some accountants, some experienced accountants. They are not familiar with the systems, okay, so but they have actually like vast experience. So they have actually more than 30 to 35 years experience in the accounting and finance industry. But the thing is, actually they are more into how they prepare the accounts is in traditional way. Okay, so they are into more over like traditional way of doing the accounting. So they are not used the systems. So I remember actually when I was working with one of these experienced accountants, so she was asking me, like, have these postings been properly done? So you don't need to worry about these postings. Okay, Xero will do it for you. So you don't need to go and check every transaction. So when you are performing an audit, you don't, before the auditors perform the audit, you don't need to go ahead and check each and every transaction. So this accountant goes and was checking each and every transaction whether the postings have been properly done. You don't need to do it, So it's actually the posting will done automatically by the system. So when you go to the journal reports, it's actually same thing in any system. Okay, all what you have to do is simply certain things you do. Okay, certain actions you take, like you can approve it, you can submit for approval. So when you approve only, it can be a bill or invoice. When you approve only, it will go to the general ledger. Okay, so then you can see this is the entry. Accounts payable has been credited, cost of goods sold has been debited, sales tax has been debited. Okay, the sales tax that you pay to the supplier, you can claim it on your VAT return, right? So for that, actually now simply you have purchased from the VAT supplier. If it is a VAT supplier, you need the VAT registration number of that particular supplier, right? So then that VAT registration number, when you are filing the return, you need to enter your VAT input schedule. Okay, so there's a VAT output, VAT input schedule. So there's a format in IRD. If you go to the website, you can download CSV format. That is the file you upload into Ramis system. Okay. All right. So then what we do is, here the missing information like address details also you can update it here. So let's update here. So number 85 Havelock Road, Mount Lavinia, Western Province. Then the country is Sri Lanka, you can save it. All right. So you can see the date, due dates, everything has been updated. All right. And you can also see now the purchase order also we have attached. Okay. So you can enlarge and see. Sorry, not the purchase order, the original bill we have attached. This is not the original bill. I just want to show you how we can attach it. Okay. Straight away you can upload it. So then what you do is, as a next step, you need to pay this bill, right? You need to pay this bill. So how do you pay? So if you are going to pay, bills like bill by bill, if you are going to pay bill by bill, or if you are going to pay a bill individually, so then what you do is, you open the bill, you can see make a payment. Okay. So at the bottom, you can see make a payment line you can see here. So you enter here the amount that you are going to pay. It can be a part payment. If it is a part payment, you have to enter the part payment. If it's a full payment, it comes by default. But if you change it, again, you can enter the full payment, 6,490. There cannot be a discrepancy. Then make sure there won't be a discrepancy. Enter the amount. If not, it comes by default. Select the payment date. Okay, so let's say the payment date is 29th. All right. Paid from, you have to select the bank account, right? So let's say if you decided to pay it from your the bank account, right? Company bank account, you select the particular bank account. So there can be multiple bank accounts. So you select the relevant bank account from the drop down list, paid from the paid from section. Then the reference you can enter. So this reference can be actually a payment reference. So it can be actually a bill number or the purchase order number. So once you enter, you can add the payment. So this is how you mark the bill as paid. Okay, this is how you mark the bill as paid. So once you mark the bill as paid, then what you do is you can send the remittance advice. First thing is you again view the bill. Once you view the bill, it will open up like this. So then what you do is you simply click this payment amount, 6,490. Then what you do is you can attach any payment receipts. So let's say if you have done the payment from your online banking, you can generate the online banking receipt, right? So that online banking receipt, you can attach it like this. For an example, like this, something like this. All right. So you can see here, this is the online banking receipt. So everything you can attach it here. You don't need to maintain any files. Like you can see, when you go to these old audit firms, okay. So most of the audit firms like that, in Colombo, if you take, so they actually keep the files, for the audit purpose. Actually, now for the audit purpose, you don't need to keep the files, because we have systems like this. Everything you can scan it, upload it, and you can destroy the papers. You don't need, okay. So you have everything, you can simply save in the cloud. Okay. So cloud space is unlimited, right? If you take 0 has, it's unlimited. So when you're uploading the file size has to be less than 2 MB, okay, or in some cases it has to be less than 25 MB. But other than that, actually you can upload unlimited receipts of bits. There is no simply a restriction or limit. Okay, even when you're inviting users also it's same. So like this, so everything is in the zero. You can see, I mean, it's very easy. All what you have to do is when you're performing the audit, when your company is performing the audit, so when you give that, when you have to give the access to the auditors, you give the access to the auditors, limited access. You give the standard access, so they will go through and they will download the reports, perform the audit. Then you create the layout and you finalize. Okay, that is how we do actually from our sister company for our clients. Actually, this is my experience I'm sharing with you. So basically, this is how actually you can upload it. So once you do that, you can issue the remittance advice. Remittance advice you can issue. So you go to the options, you can send the remittance. So first we'll view the remittance, okay? And so when you're viewing the remittance, you can also apply the branding theme as well. So it will generate the PDF copy of the remittance advice. You can see the remittance advice. This is the payment reference and everything, invoice total amount paid, reference and everything you can see here. All right. So then you can also email the remittance. So this is the remittance advice. So what do you mean by remittance advice? You might ask me a question. What do you mean by remittance advice? Remittance advice simply, it's a payment of proof that we have done the payment to the supplier. It's a payment of proof. Okay. You need to make sure once you have done the payment, you need to issue the remittance advice. So how do you issue the remittance advice? Send the remittance. Click send remittance, and you can customize this email. All right. Make sure also you send a copy. You send a copy to your email or to your accounts department email or accountant's email. Then you can send it. All right. This is how you mark as paid. This is how you mark as paid individual bill and how you issue the remittance advice. All right. So any questions regarding issuing the remittance advices? Any questions? And other thing is actually, now you can see this bill has been paid. So we have already marked as paid. So you can also actually clone this invoice. Okay, you can clone the supply invoice. So how do you clone the supply invoice? Open this invoice, then go to the bill options, copy. All right, copy. Another important thing is you can also make this invoice repeat. Okay, you know what is repeat, right? We did the repeating invoices. We can create a repeating invoice schedule, and we can simply ask Xero to. Simply, we can not ask. Actually, we can let Xero to automate this repeating process. So once you create the repeating schedule, you can select how often you want to repeat and all the other information. You can type it there. Then Xero will repeat it for you. And if you want Xero to email it, Xero will also email the invoice. Okay. Same thing here. The bill also, if there can be recurring bills, recurring expenses, these recurring bills you can also automate it by using the repeating option. But that repeating part we'll be doing next. Okay, you can also edit here. You can see this is editing. So when you are editing now, you can see here when you are editing a paid bill. So normally actually you don't edit paid bills, but in case let's say you want to do some changes, all right. So when you're editing the paid bill, remember only 4 things you can change it. That is supplier's name, due date, PO reference number, and the ledger account number, ledger account name. Ledger account name, only you can change it. Only 4 things you can change in a bill, in a paid bill: supplier name, due date, reference, and the account only, ledger account only. Okay. So I'm going to click cancel here. So then if you want to clone it, you can also, what you can do is you can click copy here. Same thing will get copied. Due date, you can select it here. So let's say we'll select here the due date, 22nd. And we can change here the bill number. All right. So if you enter the same bill number, it won't allow you to save it. So therefore, you can simply change the bill number and you can say it. Then same thing also you can copy and you can clone it. All right. So you have this cloning option, or we call it copy option. So I hope you understood. So if you have any questions, please let me know. All right. And other important thing is, every time when you are creating a bill, you don't need to go to the purchaser section and create the purchase order. Then like I showed you, click submit for approval, then approve it, then build and convert to a bill. That is unnecessary. Now service type of bills, let's say if you have already paid, there can be recurring bills. Okay, on a monthly basis you receive like the bills that actually you received from, you received for utilities like electricity, water, gas. These are all the business related ones. Then there can be office expenses, stationery and printing. So all these bills actually you can enter manually here. Okay, you can click here the new bill option and then simply enter. Okay, also some of these bills, if you have the soft copies, you can upload it so that certain information will capture from the bill and it will update in the bill template. Okay, that also can be done, because if you go to now this down arrow next to new bill, there are so many options available here. You can see new bill. This is the manual way of entering the bill. Then repeating bill you can do it. Then also you can upload the bills. This is a new feature Xero introduced. Also you can import from CSV. So that means we can import the bills using CSV file. Same as how we upload these sales invoices under sales. Also you can issue the credit note as a supplier credit note. Also you can issue here. All right, and you can allocate the credit. So the same features available under invoices available here. Only difference is we have the new feature here, upload bills. Okay, upload bills we didn't have it. Actually, this was introduced last year after September. Now they announced this new feature. So what you can do is when you upload the bill, let's say bill copy, what Xero does is, earlier Xero didn't have OCR feature. What do you mean by OCR? Optimal character reading. Okay, now Xero has the optimal character read option for the feature. So what Xero does is certain information. So like bill number, invoice date, description, and sometimes description. Sometimes it won't update the description. If the Xero cannot scan properly the description, then it won't update it, and the quantity and price also will update. Okay, other information you have to manually update it. Now even when the Xero scans the supplier bill, it won't update the supplier name. If you have not created the supplier name in Xero, it won't update. Okay, so let's say if it is a new supplier, so then it won't update. It will show as no contact. Okay, and also there's another feature. You can see automate bill entry. Automate bill entry means you can forward all the bills to this automatic generated email from Xero. All what you do is whatever the bills that you received your email from different supplier, you can forward to this email. Then it will come under draft section. Okay, it will come under draft section. I will show you, okay, in few minutes. So you can see there are different options that are available. Now another way of entering the bill is actually using HubDoc. You know HubDoc is part of Xero, right? It's part of Xero. So Xero bought the HubDoc company back in 2018, almost 7 years ago. So HubDoc was actually one of the add-ons, in Xero Marketplace. Xero bought it for like $180 million. Okay, so with that, HubDoc became a fully subsidiary of Xero. So when you use Xero, like when you select the paid pricing plan, not only you have access to Xero, you also have the access to HubDoc. Okay, so HubDoc is actually, it's famous. Like there are similar platforms like HubDoc, like Receipt Bank, we call it Dexter now, and so also there are some other like Expensify and some other bill platforms as well. But HubDoc and Receipt Bank, they are competing in the market. But thing is, HubDoc is a Xero product now. Okay, So if you are using HubDoc, you can maintain all the bills there, and from there you can push it. But HubDoc has a better OCR feature compared to Xero. Now Xero also somehow incorporated the OCR feature into the system, but only thing is in HubDoc, even the new supplier names, it will scan it. It will scan it, it will update. So that's why the OCR feature in HubDoc, because it's a document management system, is powerful compared to Xero. Xero actually, when you upload there, it won't update the supplier if the supplier is not available in Xero. If it is available, it will update. Okay, so I will show you these examples. Okay, so what we do is first we'll create a new bill. Again, we'll create a new bill. All right. Okay, let's create a new bill. So let's say, so we are going to create a new bill. So you can see there's a new bill option. So you click here, new bill, right? Like this. Straight away you are creating the new bill. Let's say you have received a bill from, so let's assume you have received a bill from office suppliers, okay, from officesuppliers.lk. So let's assume, so that is actually what you have purchased is stationery items. So you enter here office suppliers, so .lk. You can create the contact name, other details you can add later, okay, address details and email, everything. Then you select here the date. So the due date is, let's say, actually you have to settle in 7 days. Reference number you can enter. So you can update like this, then the bill you can attach it, okay, like I showed you, you can attach it here. So then what you do is you enter the description here. So let's say stationery items. So all the stationery items you have purchased. So then you can simply enter the quantity. So let's say unit price, let's enter 10,000, right? And we can code this one as an expense, okay? This is not stocks actually. So we can go to printing and stationery expense account. If it is inclusive of VAT, we have to select the VAT on purchases, all right? So altogether is 11,800. So you can check the supplier bill and enter, okay? According to the supplier bill, you can enter here. So the amounts have to be matched, okay? Even the tax amount, net amount, total amount have to be total amount has to be matched. So there cannot be discrepancies. So once you enter like this, you can approve it. Straight away you can approve it. So then other details you can simply edit here. So let's say like add the address. So let's type it here, hello at officesuppliers.lk. So like this you can enter. Country also, if you want, you can update it. So once you update here, so then what you do is you can simply approve it. Once you approve it, you can update it here. Also, you need to make sure you upload the copy of the original bill. All right. So then this will show under payable. So how this entry has been posted: printing and stationery has been debited with 10,000. The VAT payable has been debited, which is 1,800. 11,800 has been credited to accounts payable, right? So this is how you enter manually. There's another way you can enter. What is another way? Other way. So like I mentioned, you can automate the bill entry. All right. So you can also review the duplicate bills here. Okay. So if there are duplicate bills, it will show here. So in all these duplicate bills, you can review and you can delete. If the particular bill has been duplicated, you can delete it. Now, when you automate the bill entry, what you have to do is whatever the bill that you have received, you can forward it here. Okay. So just give me a second. Let me show you. So now what I'm going to do is I'm going to forward some of the bills to this email. Okay. I will show you how to do it. First, let me access my email address. So then I will show you. Okay. Okay. So you can see here, I have uploaded here a bill. Now this bill, okay. So this is the actually a telephone bill, SLT, from SLT e-bill. So what I'm going to do is here, first thing, so I actually copy this automatic generated email. So I click this more options button, 3 dots, then you click your automate bill entry, then you click copy. So once I have copied this one, I can simply forward it. I can simply forward here. Okay, I can simply forward this bill to 0. So how you forward this bill to 0? If you want, you can enter a subject. Okay, so let's say if you want to enter subject as SLT, you can enter as SLT. So then you can simply forward to this email. Now this email address is unique to each and every Xero account. Okay, now the automatic email address that has been generated under bills, okay, in Xero is actually not the same as in other person's Xero account. Okay, so let's say for example, you have also created a Xero account. So in your as per your Xero account, the automatic generated email address is different to mine, right? So now what I do is I forward here, I send it to here. Now you can see this has been emailed, right? This has been emailed. Now you can see this has been forwarded to this email address. Okay, this is the invoice from the telecom. So the total is 70,646 rupees and 68 cents. So what I do is now I refresh my page. So once I refresh here, you can see still it has not been uploaded. Let me check. Okay, so you can see, can you see? It says no contact. See, the last bill, no contact, it's under draft, and the bill number also has been updated. The date, due date also has been updated, and the amount too. This is what we call it OCR feature. All what you have to do is whatever the bills that you get, you receive your email, you can forward it to this automatic email, automatic generated email from Xero. So once you forward it, you can go to the draft section. You can see this is the bill. You can open it. Now you can see the bill number has been updated. The date, due date also has been updated. The unit price also has been updated. So all what you have to do is you need to create this contact called Sri Lanka Telecom. Okay. Sri Lanka Telecom. So then, so you can also enlarge the bill and see here. Okay. So we have the option to enlarge and see. You can zoom in and zoom out. You can see you can zoom in and zoom out. So if you want to provide a meaningful description, you can copy and paste these descriptions. If not, just simply enter telephone and internet March 2025. Okay, the quantity is 1 and the amount, total amount is 70,646 and 68 cents, and this is the bill number. So this is the exact bill number, right? This is the exact bill number. So when you enlarge and see, you can see the bill number. See, this is the invoice number. Exact same thing has been updated, and the due date also correct. 1st March 22nd. 22nd is the due date. All right. So everything has been updated. So then we have to select the. So you have to create. If you have already created the Sri Lanka Telecom, then like Xero actually would have been detected and simply automatically update the supplier name. Okay, so Xero would have done that, but like going forward, let's say going forward for the future Sri Lanka Telecom bills, when you're uploading in the same way, it will update the supplier name as it. Now Xero has actually detected, because based on the historical transaction, Xero will simply update the supplier name. But for the new bills from new suppliers, it won't create the supplier name. You have to update like this. Then what you do is you select here the account. What account we should select? Can anyone tell me what account we should select? What account we should select? So what is the nature of these transactions?
Expense account, communication.
Yeah. What is the expense account? What is the categorization of the expense account?
Utilities.
Not utilities. Not utilities. Utilities you can actually categorize when you are recording water bill, when you're recording electricity bill, gas bill. Okay. So normally under utilities you categorize electricity expenses, water and gas. But where do you code this one? What is this actually?
Administration. Under administration, telecommunication.
Yeah, administration also actually it's a kind of it's administration expense. But what is the correct category of the expense? So you can actually classify this one under administrative expenses. So administrative expense is actually we call it expense title. Okay, expense title. You give it for certain expense categories. So under administrative expenses you can classify, correct? But what is the exact correct the expense category here?
Telephone or internet?
Exactly, telephone and internet. Okay, so you are paying actually to Sri Lankan Telecom for the service they are providing. They are actually giving you telephone and internet services, so there should be account for telephone and internet. Okay, if not, create it. See, telephone and internet is available. You select it here, and if you take a look at here, there are some taxes available. That is this is basically taxes and levies available. There's actual telecommunication levy as well, but anyway you can enter the total amount. All right, if the VAT component is there, VAT component is available here, but sometimes here for these type of bills actually VAT component is very small. So therefore, if you think you don't need to enter, just go ahead and enter the total amount. All right, so if you are going to enter the VAT amount, so then you have to calculate it. All right, because these taxes they have showing including everything. So what we do is we'll select as a tax exempt for now, and we'll go ahead and approve it. Understood? This is another way of entering the bill. All right, another way of entering the bill. Then you can add the address as well. Okay, so then we can also upload the bills. Okay, we can also upload this. So let's also have a look what is uploading this bill. How we can upload the bill. All right, so just give me a second again. Let me show you how we can upload the bills. So now if you take this particular bill, okay, this bill is actually from Fathom. Okay, this bill is from Fathom. Has anyone heard about Fathom? Has anyone heard about Fathom? What is Fathom? What is Fathom? I think I did show you under App Marketplace. What is Fathom? Has anyone heard about Fathom? So Fathom is actually it's a financial analysis and managing reporting tool. It analyzes the accounting data. Now this platform can be connected to Xero. Okay, so this is actually a subscription bill, monthly subscription bill that we have received from the Fathom. Okay, you can see this is for this period 21st February to 20th March. They charge $50. Okay, $50. This is a starter pricing packages, starts at $50. And what it does is analyze the software. Okay, like similar to Power BI, but what Power BI does is Power BI analyze everything, not only the financial transactions. Here it's mainly the financial transactions. All right, $50. All right, so now this is in dollars. Remember that this is in dollars. What we do is now we'll upload the bill. Okay, we'll upload the bill. First we'll upload the bill. We can convert later into rupees. Okay, so what we do is you click this down arrow next to bill, you upload the bills. Then you can select the file. So this is the file. You upload it. You can see this bill has been uploaded, and you click upload. It has been successfully uploaded. You can close it. All right. So then what you can do is you can where it has been uploaded. So let me check. Yeah, it's available. You can see here Fathom. See, it says no contact. Why? Because why it is no contact? The reason is actually this no contact. We have not created the supply. Same way when you email the bill. So this has been uploaded. Certain information has been uploaded here. So you have to make sure you change the currency here. You can change the currency to USD. All right. But they are actually, I know actually, because this is my practical experience I'm sharing with you. There are certain clients who use Zero. They don't like to actually enable this multi-currency feature. One of the reasons is it will post these bank revaluations and foreign exchange gain or loss on their P&L. They think it looks ugly on their financials. Other thing is actually they don't want to pay additional subscription. Okay, so they want to save that cost. So therefore, what they do is so for the clients that we do bookkeeping, they ask us to manually calculate, manually do the conversion. All right. So what we do is we check the bank rate. Okay. So the bank rate, we'll check the particular bank rate, and then we convert it. Okay. So I will show you now for an example. So if you are going to convert this one into rupees, $50. So first thing is, let me create this supplier Fathom. So this has been already paid actually. Okay, this invoice. So you can see here, and so let's say for an example now, so this is actually subscription, and this is $50. Let's say let's assume now we'll go to the Nation Trust Bank NTB exchange rates. Okay, so we'll go to their foreign exchange rate, and you have to check the selling rate here. Okay, not the mid rate, not the buying rate, selling rate. Okay, so USD dollar send rate is 302, and when you are paying now, and also there will be surcharges as well, credit card surcharges. So how we do is we'll multiply. Okay, so if you are going to convert the dollar value to rupees, so like this, then you again multiply it by the rate, then multiply it by the credit card surcharge. Now if you take the like merchant providers, credit card providers like Amex, they charge 7.5, especially with the Nation Trust Bank. Okay, others they charge 3.5 to 4%. So when you add 7.5, it will come up to 16,255. Okay, 16,255. So then simply you can select here. So which account that I should select here? Can anyone tell me? So like I mentioned, Fathom is it's a application, it's a software similar to Zero. It's accounting tool. So where should I quote this one? Which expense account I should select?
Software?
Exactly, yeah. It should be software. If not, you can go to subscription. So we can edit this name called software subscription. Like this, you can edit this one. So what you can do is you go to edit the chart of account. You have to go to the chart of accounts. So then what you do is subscription. You go to the subscription. Then what you do is you can enter here software subscriptions. Software subscriptions, and then you can select here tax exempt, and you can save. All right, you can see it's software subscription. Here also the same thing will apply. Okay, subscription. So once you update it, it'll update it here. So now you don't you can't claim taxes here because Fathom is actually organization, international organization, and Fathom is not a company that is established here. therefore you cannot claim taxes. All right, so subscription you can see 16,250, you can approve it. If not, what you can do is, let's say you are going to enter as a $50, all right? If you are going to enter as a $50, then what you do is, in that case, so let's say you copy this one, same thing I'm going to copy, I'm going to do some changes. And you can attach the file first. So this is the Fathom bill. Then what you do is you enter here 50, right? 50. Then what will happen is you select USD. So when you select USD, you can see the currency rate. Can you see? Currency rate. Now the currency rate is, as per the XE.com mid-market rate, it's 296. It's 296. It's actually less than the bank rate. Okay. Now what will happen is, actually, so let's say you are going to use the XE.com rate. All right. And you are going to approve it. Now if you want to enter the bank rate, then you need to enter separately the bank rate. Then you will be using the banking rate for the transactions. Okay. So if you are going to apply the particular bank rate, this bank rate, so then what you do is you have to update this bank rate. And if you are going to apply for all the other new transactions on 21st, then you can take this option and save it. And make sure when you are entering here, you need to enter the conversion rate. 1 LKR equals to 0.003. So how you calculate 0.003? Here 296 divided by 1. 1 divided by 296. Same way, 1 divided by 302.43. So whatever the conversion rate you get, you update here, then use the banking rate. So banking rates, you have to banking conversion rates, you have to update manually. Okay. If you do not want to use the banking rate, let's say if you want to use XE.com rates, then you keep as it is the rate. This is today's rate, today's mid-market rate. Then you simply approve it. Once you approve it, you will see the LKR value. Now, as per this one, this is the you can see this is the LKR value. It is 2,000 less than the 2,000 less than the previous February invoice that we entered. Okay, the same invoice we entered, but when we convert it, the value is more than the XE.com based more than the XE.com rate. So as per the XE.com rate, when it gets converted, it's 14,000. So when as per the banking rate, when you enter, it's 16,000. So that's a 2,000 rupees loss actually. All right. So you can see here. So as per the XE.com rates, so when it gets converted, it's 14,000. So as per the banking rate, when you enter the same bill, it's 16,000. Okay, because it includes the surcharges and everything else, so you have to put it. So you can see these are the changes. All right. If you want to enter the banking rate, you can enter the banking rate manually. And now, how this has been actually posted in the ledger? Can anyone tell me how this has been posted in the ledger? Can anyone tell me the entries? I will also open the Excel as well, right? How this, so when this bill, when we record in the ledger, how the entry has been posted. By looking at the bill, you should be able to tell. Yeah, what are your answers? How this has been posted in the ledger? Okay. How this has been posted in the ledger? Can anyone tell me?
Debit the subscription and credit the payable.
Yeah. So that is actually the entry. So normally when you enter a bill, so let's say a subscription bill with a LKR amount. Now here we have entered a dollar amount. Okay, it's $50. Now when you enter here the dollar amount, so let me show you now. Let me also show you. Okay, I'll show you quickly. Right. I want to run the both P&L and the balance sheet, then I want to show you here. This is the interesting thing. Okay, so when you enter here, so you can see now as per the accounts payable. So when you go to the accounts payable section here, okay, now as per the profit and loss, it's 14,830. Okay, so now here it shows 14,850. Now here it shows 14,830. What happened to that 2 rupees? And also as per this one, it's it's 14,830. See, it's 14,830. It's 13. Okay, so what actually has happened is here. So in the payable, okay, in the payable, you can see this amount has been recorded. Okay, sorry, in the payable 14,830, and here it shows 14,850. Then what happened to that 2 rupees? You can see 2 rupees. There's a 2 rupee. We call it. It's a loss. What do you mean by loss? Now currency rates can be fluctuated, right? It actually fluctuates on a daily basis. It can be appreciated, it can be depreciated. Okay, so in this case, what has happened is actually it has been depreciated. Okay, so because of it has been depreciated, there is a loss of 2 rupees and 50 cents. Now when you go to the P&L, you can see here there's an unrealized currency gains of 2.5. Okay, now how the entry has been posted. So debit software now, here actually there are some other transactions as well. That's why it shows as 0.10. Okay, so but here actually what has happened is debits your software subscription, which is 14,813.15. Then also 2.55 rupees has been debited to unrealized foreign exchange currency gain or loss. All right, currency gain or loss. So then the total amount 14,815 has been posted to the balance sheet. Okay, has been posted to the balance sheet. So now, so then what will happen is here, this is the same thing with the invoices as well. Then what will happen is when you are marking this one as paid, okay, when you are marking as paid, this 2.55 will be transferred to realized currency gains. So when you are paying, it will be transferred from realized to unrealized to realized. Understood? And at that time, so let's say you won't receive the same, you won't pay the same day. So when they invoice you, so let's say you get the invoice, you will be paying next day or the 2 days after. If the currency rate fluctuates, there will be a bank revaluation as well. Okay, that's why Xero has designed 3 system accounts called bank revaluation, unrealized currency gains, realized currency gains. Can you see these 3 accounts? Bank revaluations. These all are actual system accounts. You cannot delete or archive. Realized currency gains, unrealized currency gains, realized currency gains, bank revaluation. So what you do is you select here 21st, paid from Boost Juice. Okay, because of Boost Juice is actually LKR account, you need to enter here the exchange rate as well. So then, so the day, so when you are paying, the day that you are paying, that particular exchange rate you need to enter here. Okay, so then the reference you enter, you add the payment. So this is how the transactions get posted. All right, transaction get posted. Now, sometimes as per today now, 21st was yesterday. So as per today, actually, you can see there are no realized gains. It has been transferred to no unrealized gains. It has been transferred to realized currency gains. So now let's say we'll be paying in another 2 days, and if this rate gets appreciated, then what will happen? We will be actually only paying less, and it's good for us. It's a less cost for us. Okay. All right. Just want to teach you that part as well, the multi-currency option, right? The multi-currency option. Okay. Do you have any questions regarding what we did so far? Any questions? Please let me know if you have any questions.
So when we do the bank reconciliation, is that amount tally with the bank statement value and our actual payment value?
It should tally. Okay, it should tally. The thing is actually because now, especially when you are reconciling multi-currency transactions, all right. Mostly, if you take like the companies which are into exports and import, so what they do is actually when they receive remittance or when they make the payment to a supplier, foreign supplier, or let's say it can be a tea supplier or let's say spices supplier, so whatever. So it can be a foreign supplier. So when you are making the payment, so like when you are making the payment from the bank, so normally you pay it from your dollar account, right? From your dollar account. So when you make the payment, when you're making the dollar payment, you can generate, we call it the remittance advice. Okay. So remittance advice, you can generate it from the online banking, and there you can see amount that you paid and the bank charge. Right. So bank charge will be separately goes as a separate transaction, and the amount that you pay also you can see. So based on that, you can simply mark as paid. So that's the thing. So the thing is actually, so when you are paying, so you have to make sure you select the correct date and select the dollar account. And let's say you pay a dollar amount in LKR. In that case, again, the rate that the bank rate that applies there when you're making the payment on the particular day, same rate you need to enter here manually. Otherwise, what will happen if you take the XE.com rate, there will be discrepancy. Okay. Then from the banking, it will further update the foreign exchange gain or loss. So it is incorrect. All right. So when you check the PNL, it's now let's say when you mark as paid as per the XE.com rate, what will happen is, let's say it's 14,000, and from the bank it has got 15,000. There's a huge discrepancy. You can't record it as a bank charge. That is incorrect. So in that case, what has happened is, how you have mark as paid is incorrect. You need to enter here the bank rate. So how do you enter the bank rate? Like I showed you from here. So when you are recording the $50, like I showed you, $50 is invoice under paid. So this rate you can see here. Now, before we marked as paid, we have the option to edit the exchange rate, like I showed you. That rate you need to update it there. Okay, you can't take the XE.com rate, because XE.com rate actually provides mid-market rates. We have to take the selling rate, bank selling rate, and also the rates can be different from bank to bank, from some part to NTB to commercial to HNB, it can be different. Okay, that part we have to do it manually, because zero doesn't care about these banks, so they take actually the exchange rate from the common platform XE.com. If you take in most of the banks, like international banks like Commonwealth Bank, NZ Bank, Lloyd Bank, Bank of Scotland, Bank of America, so they actually simply rely on the XE.com rates. So their bank rates and the XE.com rates almost similar, or there can be small difference. But Sri Lankan banks and the Sri Lankan bank rates and the XE.com rates are not identical. There can be huge difference, not very big difference, but they are actually there can be a difference. Okay, definitely there is a difference, and so therefore you have to decide. So normally, if you're actually preparing the accounts in Xero for a local entity, you take the bank rates. Then you have to enter the bank rates manually. All right. So this only applies to import and exports companies. Also, this only applies to if you are a service provider or if you are actually a retail company that sells goods and services to a foreign customers. Okay, so in that case, actually, if you are importing from foreign supplier, then actually you need to enter bills in dollar values or in other currencies, as well as same thing you have to do it when you are invoicing the customers. All right, so I hope you understood. So the next thing is actually we'll do the repeating bills. Okay, the repeating bills also same as repeating invoices. All what you have to do is you can click new repeating bill. Okay, you can click new repeating bill. So then what you do is, so next to new bill, there's option called new repeating bill. You open up this schedule. So once you open up this new repeating schedule, you can enter here how often you want to repeat this bill. So let's say if it is a once a month, you select month. If it is a once a week, you select week. Okay. So only 2 periods are available here. So let's say you want to repeat monthly. Then the bill date you select. So let's say the bill date is 1st March. Let's say not 1st March, 3rd February. So you select a 3rd February. So then what you do is you update the due date. So when you are updating the due date, you have to select here a particular payment term. So these are the payment terms. So these payment terms I have gone through with you, okay, when I was doing the invoice settings. So you can see of the following month, days after bill date, days after the end of the bill month of the current month. So these are common payment terms. So we select here days after the bill date. Then we select here 30 days after the bill date. 30 days after the bill date. So once you enter 30 days after the bill date, 30 days after the bill date, then end date also you can update here. End date also you can update here. So end date is actually optional. So end date means that is the date where this repeating process stops. So if you select the end date as 31st March 2026, so you can update as a 2026. You can see here, this is anyway optional. If you do not want to update, you can simply skip this one. This end date you can update based on the contract renewal date, agreement renewal date, like that. All right. So what you do is actually, so you can update here 31st March 2026. So then, so what you do is you simply select here approve. Okay, you simply select here approve, and or you can save as a draft as well. So if you save as a draft, again you have to manually approve it. So you can simply straight away you can approve it. Then that recurring bill details you need to enter, starting from the bill from. Okay, so let's say you get the bill from your landlord. Okay, this is actually office rent you are paying. So let's say you are getting Management Corporation. So that is the company name. Okay, or that is the office place name. So you have office there at the Management Corporation building. So that is a landlord. You get the bill. So here you need to enter the reference number. Okay, so here you can enter the reference number or the bill number you can enter. So if you don't have any idea about the bill number, you can set the reference number from the placeholder. From the month and year, you can update. Month and year, you can update the reference. Then the description you can update. The description you can update. So let's say the description is monthly rental. Okay, monthly rental. Monthly rental. So monthly rental you can update. So then you can update here the quantity as 1 unit prices, let's say 25,000 rupees, and you go to where? You go to office rent. Okay. So there's an account called rent. Later you can edit this one as an office rent. Where this is actually, you can edit as office rent. So you can update as office rent. Okay. So then you can simply update as tax exempt. All right. So rate you can update as a tax exempt. And then what you can do is simply, you can see everything we have updated in the repeating schedule. So then what you do is you can save it. All right. You can save it. So once you save it, so you can see the repeating schedule has been created. Okay, repeating schedule has been created. So all what you have to do is you need to save this repeating schedule. That's all you have to do it. So once you have saved this repeating schedule, you can see now the repeating schedule has been created, and it says this repeats every month. So on a monthly basis this repeats, and bill will be created automatically on 3rd April, and this will end on 31st March. That means repeating process will end on 31st March. So each month on 3rd it will create the bill, and this will be automatically approved. Due is 25,000. Then what we do is now, once you go to the awaiting payment section, you can see there are 2 bills have been created, one for the February, one for the March. So these 2. Okay. Sorry. So these 2. You can also, this is, we got a quick view option. Now Xero also has the quick view option. Okay, a lot of features are there now in Xero. This is a quick view option. We can see quickly, you can view the inside. Okay, so if you want to open these 2 bills, you can open these 2 bills like this. Sorry. So you can see, so this is the repeating transaction. Okay, so this repeats on a monthly basis. This also repeats on a monthly basis. So this is actually connected to the repeating schedule. Okay, so when you view this repeating schedule, from this repeating schedule, these 2 bills have been created. Bill for the month of March and bill for the month of February. All right. So you can see here. So then what you can do is, now if you want to do any changes to the pricing or any other thing, any details, you need to make sure you edit the repeating schedule. Then it will reflect on the future bills. It will reflect on the future bills. All right. It will reflect on the future bills. It won't reflect on the past, the past bills that have been already created. Okay, from the repeating schedule. So you need to make sure. So if there's actually price update, you do the update on the schedule. Okay, repeating schedule, not on the repeating, not on the actually the past bills. Okay, that have been created from the repeating schedule. So if you want to do any update, updates in the past bills that have been created from the schedule, then you have to edit those bills. All right, edit those. Let's say for an example, 2 months ago, the landlord has updated the new pricing. So you don't know. So you actually, for the same price you have created, for the same amount, you have simply create the repeating schedule, and the old prices have been updated for the last 2 months bills as well. So what is happening in that case, actually, when you change in the schedule, it won't update in the past bills. So you have to edit those, because those bills already have been approved, right? So whatever changes you want to do it, you can do it. It will reflect in the future bills. Okay. So this is how you actually create the repeating bills. All right. Okay. So let me know any questions you may have. All right. So I'll be able to explain to you. And other thing is actually other thing is the inventory. Okay. So I will start the inventory, but I will continue this inventory part in the next session. But I will start today. Okay, the inventory. Now we have created these few bills. Okay, so this will be continued, but at the same time I will start the inventory part as in. Now how do we create the inventory items? This is really important. Okay, so everyone please pay attention therefore, because definitely there will be a question from the inventory as well as from the bills. Okay. So now how do we create the product and service items? So you go to the business, then you go to the product and services. This is the actually last feature. So actually the one before the last feature. Okay, one before the last feature, which is the product and service. So once you go to the products and services, so then what you do is, you can see here there are no product or service items are available. Okay, but in Xero, remember, you don't need to create service items, right? So why you don't need to create the service items? Because the thing is how Xero has designed all that templates, invoice templates as well as the bill templates. In a bill template or the service template, in the invoice template, you can select the ledger account. Now we'll be doing the QuickBooks as well. We have already started the QuickBooks. I did up to estimates. In QuickBooks, the thing is, when you're creating an invoice, you don't have the option to select straight away the ledger account. You have to create the item. It can be a product item or service item. Then you have to configure. You have to link with your ledger account. Understood? It can be a revenue account or expense account. All right. Now in Xero, actually service items you don't need. If you want to create service items, you can create it. All right, you can create definitely if you want to see your service items, but it is not necessary, because in the whatever the service that you're providing, you can enter on the description or the narration, enter the quantity amount, go to the ledger account, approve the invoice or approve the bill. Then what you do is simply you can mark as paid, or you can simply apply the payment against the invoice or the bill, right? But when you're creating the product items, so let's say whatever you purchase, simply it goes to inventory. All right. Oh, in that case, we need to have a mechanism where simply items that you purchase, you need to simply store in your warehouse. So when you store in your warehouse, for each and every item that you purchase, you have to place it on the, we call it the gondola, or we call it on a rack. Okay, store rack. And not only that, so for each and every item, there's a bin card or there's item code. There has to be a SKU number. All right. So what you do is simply, so when you need to create these items, so you can create these items by importing or manually. So if you are going to create items manually, so let me create now a few items. Just give me a second. All right. So what I'm going to do is now I'm going to create these items. So these are actually the cosmetic products. Okay. So these ones actually, so you can see these are some perfumes. Some of them are shampoo. All right. So these items I'm going to create it here. So this is the product name. The product name is here. You can see the brand name also there. Adidas After Sprott 3-in-1 Shower Gel 400 milliliters. So what you do is you can click new item. Once you click new item, it will open up like this. So then first you can enter the item name. But remember, the item name has to be less than 50 characters. So 50 letters. It cannot be more than 50 characters. Then the code actually it's mandatory. You need to create a code. So here we can enter AAS and SG 400 001. So these are code. Okay. So as per your requirement, you can create the code. Remember the SKU number, stock keeping unit is not the same as the code, item code. But sometimes there are circumstances where you enter the SKU number as also as the item code. Then once you enter here, you enter the cost price. So let's say the cost price is so as per this one, the cost price is so let's enter here 2000 cost price is 1500, and we select here, let's say, cost of goods sold, and tax on purchases will select here VAT on purchases. Then the description for the purchase item is same as well as for the sales item. Then the sales price also you can enter. So let's say sales price is 3800, and we select here sales account. This we call it configuration of the chart of accounts. We are linking the chart of accounts to this product item. Then the tax rate is VAT on sales. Now the thing is, actually you can see purchases, sales and everything. Okay, everything has been linked, but there's an option called track inventory item. What do you mean by this track inventory item? Now when you read this, you will understand. When you select this option, what will happen is it will track the quantity and value of the stock on hand. Okay, and it says this option is suitable for organization with less than 4,000 products or service, who purchases items before they are sold, and who calculates the average cost of items. Okay, now think and tell me. Okay, I'm asking questions. Think and tell me. If I don't select this option, what will happen? So I don't select this option. Okay, I'm ignoring. I enter other details, I update it. So what will happen? If I don't select this item, what will happen? If I don't select this, yes, please go ahead.
Inventory will not update with the sales.
Exactly. Inventory won't update. Okay, this won't be recorded as inventory asset. So everything we purchase will go to the cost of goods sold account. Okay, now what if I select here track inventory item? Okay, now other thing is, if I select the purchase account as inventory, let's assume there's an inventory account here. Okay, there's an inventory account, but it doesn't show from the drop down list. I'll tell you the reason why. Let's say you have created inventory asset as a current asset account. You select the inventory. What will happen? Every time you purchase and you don't select this option, you select here which account? Inventory item. Every time you purchase, it goes to your inventory assets. Inventory asset will show under current assets on your balance sheet. And every time you sell, what will happen? Sales entry will get posted. The inventory stock adjustment entry won't get posted. Why is that? Why? Because you have not tracked the inventory item. That is the reason. Okay, so you can see inventory balance won't get reduced. It will keep on going up. Sales value also keep on going up, and your profit as well as the inventory will be overstated. Okay, that is wrong. This is why these features are really important. You need to select here track inventory. So when I select track inventory item, what will happen? This removes that account. See, when I click track inventory, that means 0 will track the quantity and the value of the stock on hand of each and every item that you create here, and every time when you purchase, it will post in your inventory account. Inventory account is 630. You go and check under chart of accounts. Okay, inventory account has been created as an inventory. We'll go to the assets. See, you can say inventory asset account, the type is inventory, because this inventory account has been linked to the product and services, the inventory module. Now every time you purchase, it goes to inventory. Then you have to select a cost of goods sold account. Okay, so you select a VAT on purchases. So once you select cost of goods sold, now we have also selected this option track inventory item. What will happen is, when you sell it, what will happen? Sales entry will get posted, as well as cost of sales entry also get posted automatically. Okay, so based on the cost price and the items that you have sold, it will multiply it automatically. It happens, it will get simply posted in the ledger. Otherwise, what will happen? This entry won't get posted automatically if you do not select this option. That is why the importance of track inventory item. So then on the other hand, all the inventory items will be valued based on the weighted average cost. Now there are inventory valuation methods. Okay, we got inventory costing methods. You have the FIFO, first in, first out, last in, first out, HIFO, highest in, first out. Then you have a weighted average cost. Xero has the weighted average cost. QuickBooks also has the weighted average cost. So also has a weighted average cost. Okay, in all these, most of the accounting platforms, they have the weighted average cost. If you take in other inventory platforms like Emerge, they have the FIFO. Here you can select FIFO, the LIFO, the HIFO, you can select it. All right, you have the options. So here you can select, inventory will be calculated, will be valued based on the weighted average cost. Okay, all right. So what we do is we'll go ahead and we'll save it. So this is how you create the inventory items manually. Okay, so with that, what we do is we'll wind up for the day today. All right. I hope you had a productive session. So what I'm going to do is I'll be continuing with the inventory in the next session. Also, the bills to pay, I'll be continuing as well. All right. So the bills to pay section, here also I'll be continuing. I'll be starting with the import from CSV, new credit note, and also the batch payments also I'm going to show you. Okay. So before we wind up for the day, I want to show you a video. Okay. This is called JAX. This is a new way of entering the bills. Okay, you will be mesmerized when you see this. So this will be in the beta mode. Now when you create the bills, so you have already set up the Xero account. You can see, okay, you can see here there is a new option called JAX. Now what is this JAX? JAX stands for Just Ask Xero. It's in a beta mode. Now this is AI companion, you can see here. All right, just watch this video. I hope you will also hear the audio as well. Okay, I share the audio as well. Okay, let me play this one. This is called JAX. Okay,
what if you could get back to what you love?
JAX, edit the wedding quote to include 5 more centerpieces.
What if you had a smart business companion that was with you everywhere? What if your routine tasks could be automated? Done faster, smarter, and with peace of mind. So you can keep your business moving and reclaim your time so you can focus on creating.
Great work, guys. We're on schedule.
What if you could spend less time billing and more time building?
Did you get my email?
About adding the extra cabinet?
Yes.
Absolutely. Would you want to take care of it right now?
Sure.
This is one of my favorite shots, this one right here. Can I get the drone footage for this last sequence?
See your priority tasks each morning. And have them automated and streamlined for you. Get personalized insights wherever you are.
Jax, give me the latest cash flow projections. Based on these projections, you can hire those 2 new employees you want.
Great.
You also mentioned wanting to grow in new markets. Let's talk about that.
Awesome.
And what if starting up was as easy as do more of what you love? Get back to where it all began and unleash the potential of your business. It's all possible. Just ask Xero.
so you can see this new AI tool will be will be launching soon. Actually, it's in the beta mode. You can use it. I think they will charge a subscription for this. Okay, I'm not sure about that, but they announced it last August about the JAX. So JAX is all about its AI, you know, like very similar to Siri and Alexa. All what you do is speak to the computer or the mobile. You can also create the you can save the contact, JAX contact. You can save it on your mobile. You can see in video, you know, some of the quotations, how those people created. All you have to do is just speak to the person, or just type in the information. It will do the work for you. Some of the payroll tasks you can automate it. Some forecasting, everything will be automated. Okay, so most of the human human work will be automated, or the task that used to do by the human will be automated by the AI. Okay, you can see it has gone to the next level with the AI. So it's all about automations. Okay, just want to share with you. You can search about more, just go to this. I will share with you this one, Just-Task Zero. And this will be launching soon. I think probably another 1 month or 2 months time. Okay, it will be there, and this will be a game changer with the introduction of this one. So we have never seen this kind of a feature in other platforms. All right, like in QuickBooks, and QuickBooks also will come up with the same thing. QuickBooks also very bigger. It will come up with the same thing like this, and also other platforms as it. They will follow the Zero. Right? Just want to show you. Okay, thank you very much for your participation with that. Really appreciate. So this will be continued. Like I did mention actually last week, I'll be planning to scheduling a extra session. So probably in the coming week I'll schedule it. Okay, but I will let you know at least 1 day or 2 days in advance. I will definitely inform you. Then we'll do it from 7 to 8:30 or 9. Okay. All right. So with that, we'll wind up for today. And thank you very much for your participation. Thanks. Recording will be uploaded in 30 minutes. Thank you.